We are here, we are here, we are here on this amazing day. Okay, everyone, this is Cam Jones, FX Daily Analysis, and we are marking up GBP, JPY. We are on the monthly time frame. Price action, last candle to the right hand side. Is a bearish red doji, and market is also consolidating with the last few candles. So we do have price action overall, higher highs, price action overall, lower lows, midpoint, adding second level lows, also adding third level lows. So we can see currently price action is between the two SR lines. Let's take a look at what's going on. Price action on the monthly time frame is sitting at price of 161.407. So if price work his way up, it can head up to that next high of that area, which would be at 165.385. And if price work his way down, headed down to the next level, which would be near 156.048. And we see price action sitting exactly in that midpoint of that area. So as I said before, price action is a bearish red doji. So as a market, there's a candle in that area, but if this market works its way up for the uptrend, market's coming from overall patterns. Let's draw it out. At this bottom, we have a first leg, second leg, third leg, fourth leg, retest, market push one. So we have a triple bottom, first, second, third, fourth, retest one, overall retest two for the push. And if this is retesting now, if it pushes out, that will be the third push of that SR line. If not, market is identifying a pattern which is in that area. Okay, so if so, market is identifying that coming up in green is a first leg, second leg, third leg, and we'll receive that fourth leg of that double top. We already have the double top formation, but it stopped at that midpoint. If it breaks, we're looking for a doji, identify it, or break and retest as we walk down further. So what we're going to do is we're going to add another midpoint between those yellow SR lines so we can see what's really going on as we walk down the time frame. On the weekly time frame, we have price action as a bearish red doji, so as market consolidating. So it's all reading the same thing, but very tight. So if it's respected, market could be identifying that first, second, overall, third leg. If we do receive that pattern that's going to engulf out of here, market's coming from that double bottom. If not, market's coming from that multiple pushes to that top, which would be identifying first, second, third, fourth, retest one, retest two, and then market looking for that break. So market's coming from some type of triple top and a retest, or maybe four pushes to that top if this area is added as we walk down the time frame. So we're still looking for the break and retest as that market works its way down. But on the weekly time frame, if price works its way up, it can head up to that midpoint between those red and yellow SR line to the top end, which will be at 162.953. And if price works its way down and break this SR line, is headed down to the next area, which would be near 158.508. Walking down to the daily time frame. Okay, on the daily time frame, price action is a bearish red candle with a push up to the top, so it's retesting the previous side. So we have an overall pattern in that area. But besides that, the market, first off, that market's consolidating, so it could keep doing that. But if we take it level to level, we can see that pattern that's forming inside. Overall first, second, third, fourth, retest one, retest. If it pushes down, that will be a second push, will be coming from a quadruple top or triple top and a retest. Okay, so we know price action came back to retest, so it's very bearish for that market to push down further. price action is engulfing the previous second, third to last bodies. We're going to see what the market's going to do as we walk down further. If that market is respected, overall first, second, third, fourth, retest one, overall retest, we're looking for that engulfment pattern in that area to push that market up for a triple bottom and a retest or a quadruple bottom overall. On the 4-hour time frame, we have price action as a bearish red candle spiked down to the low of that area, so it tagged that area, so it came back for a full return of that pattern. So we do see that first, second, third, fourth, retest one, came back for a full retest to see if it's going to push up at least to this midpoint area. If not, market's working its way down near these wicks and then follow up to the next level. So if price works its way up, then we see that pattern, markets head up to 161.835. If price action continue to break this area with a bearish red candle, market is headed down to the next area. If it engulfs these areas, these candles will work its way down to 161.048. So we can see that market is near that midpoint of that break. So we do have price action high, price action low. So we have a midpoint in this area here. So as we walk down, we're going to see if that market did come back for that full retest or some type of pattern, identify a retest in that area for that market to be pushing down further. But we do know price action losing momentum. So as we walk down the time frame on the 3-hour time frame, market just came back for a retest. So if you think about putting a zone here, SR line, market broke and just retested, and it can do anything within this area, consolidation or push down further. But we have to let that market do what it do. Same thing, break, retest. Very strong dominant candles at that area of support. So market can be pushing up further if we see price action to engulf the second last candle. Same as well, now the market is getting choppy, not choppy, market is getting, it's just identifying multiple candles that would took that market for that break and retest to that midpoint area. Same thing as a 45-minute time frame, but some type of patterns forming at that low. We'll talk about it as we get to the 30 or the 15-minute time frame. On the 30-minute, we can see that pattern spike down to a low price action bearish red doji with a retest. So it's identifying a first, second, third, fourth. Price action is a retest, or we got to receive a candle push out. Market's coming from a double bottom and a retest. On the 15-minute time frame, if that's not identifying that as an overall break, a retest, and all we're looking for that market to engulf and push down for a bearish red candle, and market's coming from a break and retest. On the 5-minute time frame, price action bearish red candle, bearish green candle, just retesting that area. Same type of structure, first, second, third overall, fourth, got the double bottom, retest, is going to push, or it's going to break back into that midpoint of that area. On a 3-hour time frame, still reading the same thing as well. Market is just more detailed, and we can see price action coming from that double bottom, also as an overall double bottom. So we have first, second, third, fourth retest. Is it going to push up further? And also there's a pattern at this lower first, second, third, fourth retest. Is it going to push up further? So it's identifying multiple times of a double bottom and overall and at that area price. If not, price action tagging that area multiple times for that resistance to push that market down in that direction. As we can see, first, second, third, fourth retest is going to spike down. If so, price action has to engulf the previous second and third last candle. It is happening, but price action is a doji, which is make that market indecisive. You want to see something engulf that candle as well. So it's like a 50-50 chance for any direction. So we definitely got to wait for the pattern to identify itself and do what it do. And the pattern we're looking for is similar to the engulfment. Very important information. Please study Forex pattern cheat sheet. Click on images, breakout and retest strategy. Click on images as well. Okay guys, this is Cam Jones, FX Daily Analysis. Thank you for watching and thank you for your attention. GBP, JPY.